Welcome to the channel. We are diving straight into the action with Wall Street slipping from record highs as chip stocks retreat, and the crucial developments in U.S. Iran peace talks are in sharp focus. We look at how ARM holdings tumbled after supply concerns overshadowed strong earnings forecasts, and we explore what Tehran is currently reviewing in a proposal that could halt the conflict while leaving major issues unresolved.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we look at the broader market movement. The Dow Jones Industrial Average couldn't hold the 50,000 level, fading to 49,607.16, showing that optimism around crude oil didn't reach every sector, while investors are keenly awaiting Friday's non-farm payrolls data to gauge the true strength of the U.S. labor market. We also have a major story on the technology front. SiTime stock has seen explosive growth after its first quarter earnings report, soaring 454% year-over-year, driven by expanding opportunities in artificial intelligence data centers and low Earth orbit satellite opportunities. Finally, we see the end of the session results. The S&P 500 closed down, with Intel and other chip stocks giving up gains, while we review the strong performance of cybersecurity leaders like Datadog and CrowdStrike. Stay with us for the full breakdown. Wall Street experienced a pullback from its record highs on Thursday as a significant sell-off in semiconductor stocks pressured the broader market. Investors were simultaneously focusing on developments in U.S. Iran peace talks and anticipating crucial employment data scheduled for release on Friday. Earlier in the session, the S&P 500 and the Nasdaq had touched fresh record levels, buoyed by falling oil prices and optimism that a potential agreement between Washington and Tehran could de-escalate geopolitical tensions and stabilize global crude supply. However, these gains eroded as trading continued, with heavyweight chip makers dragging major indexes lower. Shares of ARM holdings plummeted by 10.8% following concerns regarding the company's ability to secure supplies for its new AI chip, despite a strong earnings forecast. The Philadelphia Semiconductor Index declined by over 2% after surging nearly 60% year-to-date. Market strategists indicated that the immediate focus remains on external news, specifically developments concerning Iran and the upcoming jobs report. One strategist noted that if a positive announcement regarding the conflict emerges, the market could see a significant upward move. On the geopolitical front, officials and sources suggest that the United States and Iran are nearing a temporary agreement aimed at halting the conflict. Tehran is reportedly reviewing a proposal intended to pause fighting, although several contentious issues remain unresolved. In energy markets, oil prices fell by approximately 3% in volatile trading, leading the S&P 500 energy sector to decline by 2.3%. Despite the broader dip, technology and artificial intelligence-linked stocks maintained momentum, supported by robust earnings and strong demand for AI infrastructure. Cybersecurity stocks also showed strength, with Datadog shares surging 28%, while CrowdStrike and Palo Alto networks gained significant percentages. On the economic side, recent data has eased concerns about slowing U.S. growth. Unemployment claims rose less than expected last week, signaling a resilient labor market. Investors are now keenly awaiting Friday's non-farm payrolls data, with economists polling suggesting job growth in April is expected to be 62,000. Traders anticipate the Federal Reserve will maintain steady interest rates through the end of the year, citing the resilient labor market and elevated energy prices as key factors. Conversely, some sectors faced headwinds, with Whirlpool plunging 12.5% after missing first-quarter sales estimates and suspending its dividend. Overall, declining stocks outnumbered advancing shares on both the NYSE and Nasdaq. The S&P 500 registered 17 new 52-week highs alongside 9 new lows, while the Nasdaq Composite recorded 115 new highs and 66 new lows. The Dow Jones Industrial Average experienced a significant pullback, falling below the critical 50,000 level on Thursday, signaling a cooling in Wall Street's recent rally. Opening at 50,002.39 and briefly peaking at 50,130.2, the index retreated to 49,607.16 by early afternoon, as the momentum built on cheaper oil and tech buying began to wane. While the S&P 500 and Nasdaq Composite managed to post new highs during the session, the Dow lagged, suggesting that optimism surrounding crude oil did not translate uniformly across all sectors. The downturn was concentrated, with Caterpillar and Merck leading the losses, erasing approximately 194 points from the Dow, alongside contributions from J.P. Morgan Chase, Chevron, and Sherwin-Williams. Key sector performance showed divergence. Chip stocks faced headwinds, with ARM Holdings sliding due to supply concerns impacting its AI chip forecasts, and shares in Intel and Advanced Micro Devices edging lower. Conversely, Datadog outperformed, lifting its full-year outlook and boosting cybersecurity stocks like CrowdStrike and Palo Alto Networks. Market sentiment remains highly dependent on upcoming economic data and geopolitical developments. Investors are keenly awaiting Friday's non-farm payrolls report to gain clarity on the U.S. labor market, as weekly jobless claims rose by 10,000 to 200,000, remaining below the 205,000 forecast. Chief market strategist Phil Blancato noted that the market is largely in a holding pattern, waiting for definitive news regarding Iran and the jobs number. Earnings reports continue to be a primary driver for U.S. stocks, with S&P 500 firms pacing toward first-quarter earnings growth of 28.2%, a figure not seen since the fourth quarter of 2021, underscoring the enduring role of corporate performance. However, underlying concerns persist regarding geopolitical risks. Analysts caution that progress toward reopening the Strait of Hormuz remains unclear, with some flagging the possibility of Brent crude prices rebounding above $120 a barrel if talks fail. Furthermore, Federal Reserve policy remains a factor, with Cleveland Fed President Bate Hammack signaling that rates are likely to remain on pause for an extended period amid inflation and economic uncertainty. As the Dow settles below the 50,000 mark, focus is shifting to Friday's payroll figures, the resolution of the Iran-related discussions, and the next move in oil prices, which remain critical wild cards for blue-chip stocks. SiTime stock surged following a robust first-quarter earnings report, signaling significant growth prospects for the company's timing chips in emerging high-growth sectors. The Santa Clara, California-based firm, SiTime, SiTM, announced that its first-quarter earnings soared by 454% year-over-year, reaching $1.44 per share. Sales also demonstrated strong momentum, increasing by 88% to $113.6 million during the quarter. This strong financial performance has amplified investor interest, particularly regarding SiTime's strategic positioning in the artificial intelligence data center market and the burgeoning low Earth orbit, LEO, satellite opportunities. Analysts are now keenly focused on the company's outlook as it looks toward the second quarter, anticipating continued expansion in these high-demand technological areas. The S&P 500 concluded Thursday in a downturn, as significant weakness appeared in the chip sector, while geopolitical tensions surrounding U.S. Iran peace talks introduced broader market uncertainty. Intel and Advanced Micro Devices both experienced declines of approximately 3%, shedding some gains made earlier in the week. Meanwhile, U.S.-listed shares of ARM Holdings tumbled amid concerns regarding its ability to secure necessary supplies for its forthcoming AI chip, despite a strong earnings forecast. The PHLX chip index dropped by 2.7%, reducing its quarterly gain to 47%. Despite the sector-specific setbacks, major technology and artificial intelligence stocks maintained momentum, with NVIDIA and Microsoft both climbing nearly 2%, reinforcing investor confidence in key Wall Street AI leaders. The broader S&P 500 edged, down 0.38% to close, at 7,337.11 points. The Nasdaq declining by 0.13% to 25,806.2 points, and the Dow Jones Industrial Average falling 0.63% to 49,596.97 points. 9 of the 11 S&P 500 sector indexes registered declines, with materials leading the drop at 1.83%, followed by energy losing 1.78%. Despite the session's dip, the S&P 500 remains up 7% for 2026. Market activity was robust, with 18.3 billion shares traded on U.S. exchanges, exceeding the 20-session average of 17.5 billion. This heavy volume underscores a relentless rally in technology and AI shares, which has propelled U.S. stocks to new highs, driven by enthusiasm for AI demand and strong earnings forecasts, positioning S&P 500 companies for their strongest profit growth in over 4 years. Economic indicators have also provided support, with unemployment claims for Americans rising less than expected last week. Investors are now keenly awaiting comprehensive non-farm payrolls data on Friday, following a strong private payrolls report on Wednesday, which indicated job growth of 62,000 in April, up from 178,000 in March. Traders are maintaining expectations that the U.S. Federal Reserve will keep interest rates steady through the year, citing a resilient labor market and elevated energy prices. Cleveland Fed President Bate Hammack echoed this sentiment, anticipating a steady rate environment amidst current uncertainty. In other market movements, Datadog surged 31% following a raise in its full-year earnings forecast, while cybersecurity firms CrowdStrike and Palo Alto Networks saw gains of 8% and 7%, respectively. Conversely, Whirlpool slumped by 12% after missing first-quarter sales estimates and suspending its dividend. Overall, declining stocks outnumbered rising ones within the S&P 500 by a 1.8-to-1 ratio, marking 18 new highs and 11 new lows for the index, alongside 132 new highs and 89 new lows for the Nasdaq.